Welcome. In this video, will Xcn coin go on an uptrend? We will analyze it. Don't forget to subscribe and like, and please watch to the end to understand. When examining the chart, it is clearly observable that the price is moving within a distinct upward trend, and that this movement demonstrates a highly consistent structure. This uptrend has been reinforced recently by the price continuously forming higher lows and higher highs. In other words, with each pullback, the market manages to rise above the previous low and, with the following buying wave, reaches even higher peaks. This indicates that the price is being supported by a strong group of buyers and that the upward trend is continuing with determination. Such upward trends are considered highly valuable structures in technical analysis because they suggest that price action is developing in a healthy upward direction and that market participants have optimistic expectations. In the current situation, we observe that the price is moving by making periodic contact with this ascending trend line. These contacts demonstrate the price's respect for the trend line. Essentially, the market uses this rising line as a kind of resting or reaccumulation zone. After each touch, a strong and dynamic upward price movement typically follows. Trend lines serve as a kind of roadmap for investors in technical analysis. An upward trend line clearly reflects the general market direction, investor psychology, and the balance of buying and selling. The consistent maintenance of this line shows that buyers remain strong in the market and that pullbacks are limited. Especially when volume increases as the price approaches this line, it indicates that investors view this level as a critical buying opportunity. The price moving within this rising structure also produces promising technical signals. Every time it touches the trend line and bounces upward, it indicates that the market accepts this level as support and revives with the buying that emerges from there. This shows us that the market is progressing by lifting its low points and maintaining the strength of the trend. Additionally, this rising structure provides investors with significant opportunities in both directional decision-making and risk management. As long as the price does not fall below the trend line, the continuation of the uptrend remains technically strong. Another notable aspect is not only the price bouncing off the trend line, but also experiencing consolidation around it and then making a sharp move upward. Such structures typically indicate the completion of an accumulation phase and can signal the beginning of a new bullish wave. A similar scenario appears to be forming in the current chart. The price has approached the trend line, found balance through short-term sideways movement, and seems to be positioning itself to gain upward momentum once again. For the uptrend to remain intact, certain technical conditions must be maintained. For example, the price must continue to close above this line on a daily basis, which indicates that the uptrend is progressing healthily and that market confidence remains. As long as each new low stays above the previous one, it is reasonable to assume that the trend remains unbroken. The current technical structure supports this outlook. Furthermore, the price's loyalty to this rising trend line carries great significance in terms of investor psychology. In technical analysis, when a structure is tested multiple times without being broken, it becomes even stronger. This encourages investors to re-enter positions at levels where they previously profited. The current trend line leaves a highly positive impression in this regard, and as long as the price remains above it, it would not be wrong to say that the likelihood of continued upward movement is increasing. In conclusion, the fact that the price is moving in a distinct and consistent upward trend line is a highly positive development from a technical analysis perspective. As the price continues to respect this line, the potential for the uptrend to deepen and gain momentum increases. However, we cannot base our analysis solely on trends. So let's take a look at other metrics as well. Stay tuned. When the chart is examined carefully, it can be observed that price movements have recently entered a significant structural shift. Particularly when looking at the low points, it becomes evident that a much higher low formation has developed compared to previous lower levels. This indicates that the market is no longer accepting lower prices, and that buyers are stepping in to take positions at higher levels. In technical analysis, such higher low formations are interpreted as signs of strengthening buying interest and growing investor confidence. The fact that the price reverses direction without revisiting previous low zones and establishes a new support level confirms this view. The formation of higher lows is the first step in an uptrend. However, this alone is not considered confirmation of a trend reversal. For a trend reversal to be valid in technical analysis, not only must a higher low occur, but a higher high must also form. In other words, the price must create both a higher base and a higher peak to technically confirm the beginning of an upward trend. Looking at the current price action, there are strong signals suggesting that this favorable structure may be taking shape. From a psychological standpoint, higher lows carry great significance for investors. When market participants who previously bought at lower levels start entering new positions without realizing profits, it reflects a shift in overall market sentiment. Buyers now anticipate that prices will not return to lower levels and are positioning early, which causes the low points to move upward. If this price action is crowned by a higher high, it signals not just a temporary recovery, but the beginning of a strong uptrend. This emerging higher-low structure on the chart may represent a reversal signal that weakens or even ends the previous downtrend. Specifically, the price encountering buyers at higher levels after facing intense selling pressure at lower levels shows that the market is gaining strength. At this stage, the formation of a new higher high would complete the pattern and confirm that the uptrend is technically underway. This also indicates that the market has moved into a new price range and is now operating within a different balance. The combination of a rising low and a potential higher high forms the foundation of what is known in technical analysis as a trend reversal structure. These formations are critically important, especially during the exit phase from a downtrend. If the price exceeds the previous low and then breaks above the most recent high to establish a new peak, it signals the start of an uptrend. Such structures are not only indicative of short-term opportunities, but are also early signals of potential medium to long-term upward movements. Furthermore, these kinds of structures offer major advantages for buy-side trading strategies. Many traders and algorithms that utilize technical analysis tend to enter long positions when such reversal patterns are identified. This contributes to building momentum in the uptrend. Therefore, if the price completes this structure, a strong upward acceleration may follow, not only visually on the chart, but also behaviorally in the market. Increased investor confidence and renewed capital inflow into the market would also support the rally. Currently, the price chart appears to be on the verge of such a reversal. Compared to earlier declines, the price has turned upward from a higher level, and if it can now form a new and higher peak, this will confirm that the uptrend has officially begun. For investors, this could be both a time to enter positions and a time to patiently await the trend's development. Such periods offer unique opportunities for those looking to get in at the beginning of a new trend. Positions taken early in a trend often carry far greater profit potential over the long term. Although the MACD indicator has shown a downward crossover with recent price movements, signaling a short-term pause in the market, technical indicators and past behavior patterns provide important clues that this movement may be temporary. Especially when we look back at past chart structures, it is clearly seen that a similar bearish cross was immediately followed by a new upward cross, which caused the price to recover rapidly. Therefore, the current bearish signal could be a precursor to a new buying opportunity. Downside crossovers on the MACD indicator generally signal a short-term correction or pause to traders. However, the persistence of these signals is directly related to the overall price trend and market momentum. After the recent crossover, the histogram bars have turned to descending negativity, indicating that the bearishness is losing its strength, while the fact that the lines tend to turn up again raises hopes that a positive scenario is approaching, especially when the MACD signal line starts to approach the main line again, the first signs of a reversal of this crossover. We should wait for the MACD crossover. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.